US equities ended mixed, with the S&P 500 and Nasdaq slipping and the Dow edging up. Tech stocks dragged markets lower as Nvidia plunged, as rising valuation concerns in AI chips. However, Alphabet strengthened. Reports that Meta plans to procure Google AI chips supported sentiment. Macro drivers, conflicting data, September PPI rose, signaling sticky inflation. Retail sales rose, far below expectations, highlighting weakening consumer momentum. Policy divergence. Fed Governor Milan advocated aggressive rate cuts. However, firmer inflation limits dovish room, despite a probability of a December cut. Stability remains uncertain. Dollar index fell. The Bloomberg Dollar Spot Index also declined. Rate cut repricing, weak retail sales reinforced easing expectations, while firmer PPI prevented deeper dollar losses. Meanwhile, European equities edged higher, and some capital rotated into non-USD assets. Spot gold rose, COMEX gold futures followed higher as safe haven demand builds. Supportive factors, data conflicts increased risk aversion, slowdown fears and inflation uncertainty boosted safe haven flows. Fed dovish tone, Governor Milan's call for rate cuts lowered real rate expectations, lifting gold. Demand concerns pushed crude lower, WTI crude fell, Brent declined as well. Bearish catalysts, demand fears. Weak US retail sales reinforced global consumption concerns, EIA inventories expected to rise. Supply pressure, lower OPEC plus compliance and expectations of Russia ramping up exports added downward pressure. Bitcoin drops as risk appetite fades, Ethereum and altcoins also declined. Market sentiment, leverage unwinding, a break below key support triggered long liquidations, with total market liquidations rising. Macro overhang, dollar volatility and weakness in tech stocks spilled over into high beta crypto assets. Fundamental synthesis, markets underwent risk repricing amid conflicting data, underscored latent US stagflation risks, while widening Fed policy disagreements heightened volatility. Core logic chain, sticky inflation constrains policy, rising PPI suggests persistent services inflation, strengthening the Fed's hawkish camp. Weak consumption signals slowdown, soft retail sales validate labor market cooling, giving doves more ammunition for cuts. Valuation recalibration, high valuation tech and weak oil demand drove cross-asset adjustments. Risk warnings, a hotter-than-expected PCE print on the 26th could reverse rate cut trades. If Bitcoin breaks below $85,000, another round of deleveraging may hit the crypto market. Today's focus. US initial jobless claims, week ending November 22nd. US EIA crude inventory data, week ending November 21st. Reserve Bank of New Zealand rate decision. By Amillex.